Hey everyone, welcome to the Bitcoin It channel. Recently, I posted a few of my trading reels and talked to you about this particular move because there was a clear signal for a drop here, and as a result, I made $9,000 on this move. But then I noticed a bullish signal here, after which the price started to recover. The recovery is happening not just on this time frame, but on all the others as well. And it's recovering because there's this area here. This is a gap, a break on the chart. On the mat, it's located around 84,500. You can see this gap, and you'll also notice that we've already covered about half of it. So the recovery is already underway. The recovery is also happening because there was liquidity here, liquidity from short sellers, which we're now collecting. But pay attention to the liquidity below, which belongs to the long traders. We're definitely going to collect that as well, because after we cover this gap, we'll move on to cover these other gaps that we have. Below, the very last one is at 67,170. At the same time, you can see that there's liquidity here. This is the liquidity level on my indicator, which also shows the same liquidity that we see here. So we'll collect all of this as well, but a bit later. For now, we're going after this gap and the liquidity above. It's worth noting that this formation is moving into the zone. According to the Fibonacci, if you measure from 0 to 38 at the level of 85,176. So basically, I still expect to see some kind of bounce off this level because this is a very strong level that, in theory, should stop us. And here we can also see that there was an oversold zone. The indicator is recovering, and that's normal. Thanks to this recovery, we'll continue to see further decline. But for now, we need to recover. And the higher we manage to recover, the better it will be for the next correction. Because the downward movement will be stronger, since there are similar gaps on Ethereum on the CME as well. There's also a gap here that we're closing at 2650. Furthermore, there's also a significantly lower gap located right here, which we're going to carefully examine right now, just to see if it actually shows up in this specific area. It's definitely here, but for some reason the indicator isn't displaying it. We have a head and shoulders pattern formed. And with this pattern, it's very easy to measure the target. From the very top down to the neckline. Here, accordingly, is where the neckline runs. And from the neckline, we project the move measured from this part. So we should drop down to around 1400. Of course, we can't do that right away because there is a very strong overbought condition in this area. The price needs to recover before it can continue to decline further, just like it did here, for example. To keep falling, it first had to recover like this from this zone, and the downward movement continued. I'm also sure the same thing will happen here, because again, there's an unfilled gap just below, around the 1700 area. So we will have to do that as well. We need to fill that gap too, just like all gaps eventually get filled. It's also worth noting that we have a strong signal for a drop in gold as well. My indicator shown this too, and it warned in advance that the price would come here. Right now, we have a key resistance level here, and this move might not be finished yet, because if we look at the monthly time frame, you'll see that gold was extremely overbought. It even reached up there, around the 96 area. If we look at the history, you'll see that this kind of overbought condition has almost never happened before. It only happened in 1973. Right here, in 1973, there was exactly the same kind of overbought situation. And back then, gold was just starting its journey, just beginning to rise. But now, the overbought condition is because China started buying up gold since they began selling off US bonds, and they used that money to buy gold. As a result, gold reached very significant overbought levels. Now, for it to keep growing, it needs to unload down to the oversold zone. In other words, it needs to move from the overbought zone into the oversold zone, just like it did before. So here's the overbought zone, the oversold zone, and again, the overbought zone. The oversold zone. This, of course, could take a lot of time, so we might see something like this here. That's roughly how the price of gold will move, but even so, this will put pressure on Bitcoin because Bitcoin is also dependent on gold to some extent. And I also have this indicator that shows some very interesting levels from which the price reacted like clockwork. These are gold levels. And when one of these levels is broken through, the price drops to the next lower level, or it doesn't fall too far and stays around the level. In other words, this leaves room for a recovery, just like it did here. So we moved below the level, but if the price doesn't go further down right away, literally within a month, then it means that most likely a recovery will follow. And now it's happening. So we've moved below this level and have been holding here for several weeks now, even for a month. That's why the relevant recovery zone will be around the next level, which is right here, provided that this level doesn't drop any lower. As I already showed here, gold is extremely overbought. Because of this overbought condition, there needs to be a serious correction. So if that moment comes, we'll see the level drop lower. And it could drop right down to around 85,000. By the time the price gets up here, there's very strong resistance at the 85,000 level. I've basically already mentioned this, so that's all I wanted to say for today. And you need to understand, yes, that this gap at 84,500 will be closed. And then we'll move on to cover these other gaps as well. The last gap is at 67,000. All right, so that's it for now. I wish everyone a great day and good trading. Bye, everyone.